All right, welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. Now, in this week's Tech Corner, we're going to be covering Dell Technologies. Now, Dell is a leading global technology firm with global operations footprint in over 170 countries. The company operates primarily through two segments, its Infrastructure Solutions Group, ISG, as well as its Client Solutions Group, CSG. Now, the ISG group represents around 38% of sales, focuses on enabling digital transformations with solutions addressing artificial intelligence, machine learning, data analytics, and multi-cloud environments. This segment also offers AI-optimized servers, traditional storage solutions, network products, and related services. The Client Solutions Group is its biggest division, representing about 62% of sales. This division offers bundled PCs, including notebooks, desktop, workstations, and peripherals catering to both commercial and consumer markets, with a focus on high-end consumer and gaming offerings as well. Now, Dell Technologies over the years has well positioned itself at the forefront of AI and the cloud-native infrastructure solutions markets. The company is also committed to research and development and enhancing strategic partnerships ranging from enterprises to small and medium-sized businesses, government agencies, as well as consumers. Dell also excels in providing flexible customer financing arrangements, including as a service, subscription, utility, leases, and loans, which contribute to its recurring revenue streams. Now, when it comes to competition, notable competitors that Dell faces include companies like Hewlett-Packard Enterprises, Oracle, as well as IBM in the infrastructure solutions markets, Hewlett-Packard Incorporated in the client computing space, Lenovo, which is in the PC space out of China, as well as Supermicro Computers in the high-performance server markets. Now, Dell's unique value proposition lies in its comprehensive portfolio of integrated solutions that span from the edge to the core of the cloud. The company is recognized for its AI-optimized servers that cater to the growing demand for AI in the data center infrastructure. The company's ability to offer secure integrated solutions and maintain strong partnerships with leading technology firms like NVIDIA, AMD, and Google positions it advantageously in the market. Now, in recent news, going back to May 30th of this year, the company posted its Q1 2026 EPS and sales. Non-GAAP EPS actually rose 22% to $1.55, up from $1.27 in the previous year, and revenue topped estimates, growing about 5.3% at $23.38 billion. The company also provided fiscal year 26 revenue guidance, which was higher than estimated, between $101 billion and $105 billion, versus the consensus $103 billion, up 8% year over year. Now, in upcoming news, we have to consider its Q2 earnings report, which is coming out on the 28th of August in a couple of weeks. They are scheduled to earn over 21.8% on an EPS front to $2.28, up from $1.89 from the previous year, with sales approaching a 16.2% growth rate at $29.16 billion versus $25.03 billion for the same quarter last year. The other thing to consider is some of the other highlights in terms of partnerships. Recently, on August 11th, Dell announced it has upgraded its Dell AI data platform in collaboration with NVIDIA and search AI company Elastic to support the full life cycle of AI workload for clients. Now, there are many positives to consider with Dell Technologies. First off, the company is experiencing unprecedented demand for AI-optimized servers, with $12.1 billion in AI-related orders, as well as a $14.4 billion backlog, positioning the company well for significant revenue growth going forward. The company's AI server business is driving acceleration in its growth profile, offering compelling opportunity for investors seeking exposure to the AI sector. Now, from a valuation standpoint, as well as growth, the forward four-quarter sales and earnings growth estimates are meaningfully higher than its five-year averages, which suggests strong AI server growth. For instance, on a forward basis, estimated revenue in the next 4 quarters is over 8% versus a five-year average of close to 1.5%, while EBITDA growth is expected to be around 9.5% compared to a five-year average of around 1.62%. All the while, the forward earnings multiple of around 14.84 is both below the sector median of 23.73 as well as below its own historical five-year average of around 18. Now, despite some positive, we also have to address the concerns. Growth in the Client Solutions Group, CSG, is the larger segment, is lagging behind its Infrastructure Solutions Group, experiencing a slowdown in consumer PC demand, which may impact overall total growth. The company's high inventory levels reaching a multi-year peak pose potential risks to margins and future performance, with concerns over possible write-offs in the future. Other risks include a greater impact from an additional 10% tariff from China, which represents about 33% of total sales for the company, as well as moderation in PC refresh benefits, pricing pressures, and increased competition. In general, macroeconomic weakness affecting enterprise spending and supply chain disruptions may affect availability or costs. Now, from a technical analysis standpoint, the current technical condition for Dell is strong, and the chart pattern suggests that upward momentum may continue. The stock has outperformed the market over the last 180 days when compared to the S&P 500. For instance, it's up over 21% versus less than 6% up for the S&P. Upside momentum is also positive as measured by the RSI indicator above 50, and the MACD confirms the trend is still bullish as well. The stock is also trading above the rising 50-day moving average and is above the 200-day moving average, which is pointed up, indicating that the intermediate term trend is still bullish. Also, price is above both the 10 and 20-day moving averages, suggesting that near-term price action is positive going to the earnings in a couple of weeks. Now, in summary, the primary growth drivers for Dell are accelerating enterprise AI spending, adoption, data center modernization focused on efficiency, and the Windows 10 end-of-life PC refresh cycle. The company's extensive global reach, robust supply chain, and flexible financing solutions enable it to meet the diverse needs of its customers, fostering long-term growth and value creation. Dell's portfolio across infrastructure, client devices, and services positions the company uniquely in the ever-expanding AI hardware and services infrastructure markets to come. Now that's it for this week's edition of the Tech Corner. I'm George Tsilis. Next week, we're going to be covering e-commerce giant Shopify. Please like and subscribe to the Schwab Network. We'll see you next week.